Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 375 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today I'm going to talk about something that I haven't talked about in a while on this show, and I'm going to be continuing my Fundamental Friday theme that I started a few weeks back. I know the past couple weeks I haven't done exactly that, but that's been New Year's and Christmas were the Saturdays after those days. But we are back on the Fundamental Friday kick, and I am going to talk about life insurance. We'll talk about your need for life insurance, what life insurance is, how it works, and what I think you should do about life insurance in your own situation. So I think this can provide a lot of value and really clear up an area that is just kind of thrown out there in your personal financial life and not really thought about heavily and not really mulled over in a lot of cases. So I'm going to do the analysis for you today. So stick around for a discussion of all that and more in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. Now, I know to most of us, insurance is quite boring, and if nothing else, insurance just seems like this thing that we pay for, and we really never get our money back. And in some ways, you're not wrong, right? In some ways, yes, it very much is, we're paying for something that we may never use. But what happens if you actually need it? What happens if you actually need to use it? Now, we know we have, car insurance, and we know that we have, home insurance, right? And we know what those things are for, right? If you get into a wreck, or if you have gotten into a wreck in the past, you know that car insurance is useful. If, something has happened to your home, then you know that homeowners insurance is useful, right? But why is life insurance useful? And what should life insurance be used for? Because I don't think that I think about life insurance in the same way that most of you do, right? Many people, they, get life insurance thinking, this is a good investment in myself. It's a good investment for my family. And that's not the way I think about it at all, right? I want you to think of insurance as insurance and investments as investments. I don't want you to think of insurance as investments, and I don't want you to think of investments as insurance. I don't want that to be misconstrued. Life insurance is a type of insurance, right? So I want it to cover you, but I don't want you to be throwing, massive amounts of money into it. But before we get into all of that, right, I want to talk about what life insurance is and some of the basics. And I think somebody who has done this quite well is Dave Ramsey, and he has an article out to this point, to the point of what is life insurance, how does it work. And so a lot of what I talk about today will be from that particular article, blog post, whatever you want to call it, okay? So first and foremost, what is life insurance? Well, life insurance is an agreement between you and an insurance provider. In exchange for your monthly payments, the insurer agrees to pay a sum of money to your loved ones when you die, okay? So when you die, you get some payment sent to your loved ones, whomever you choose that to be, in exchange for you making payments every single month. And these payments are called premiums. Okay. And we'll talk about that here shortly when I talk about life insurance basics. Now, this is not something fun to talk about, right? But the reason that you buy life insurance, and the reason that you should buy life insurance, is not because you're going to die, but because those who are around you and those who love you and rely on you are going to live, Right? I think that's one of the biggest misconceptions about life insurance is that people buy it thinking, well, I'm going to die, so I better buy life insurance. But that's not the good reason to buy life insurance. The good reason is because once you die, there are going to be people left behind, right? And you want those people to be financially secure, right? So ultimately, you get to choose, hey, how much money do I want to have left to these people? Why do I want to have that money left? And what type of insurance do I want? Because there is not just one type of life insurance. There is permanent coverage, right? Which typically is not a great option. And a lot of people think it's a great option and think it can be really useful, but it's typically nothing more than a bad investment. And then there's term life, right? Which is very much recommended. And like I said earlier, it's insurance. So I only want you to spend money on what you need to spend money on, right? And what are we spending money trying to do? We're trying to insure against our death up to a reasonable basis. And what I'm saying up to a reasonable basis is that at some point in your financial life, you get to a place where you have investments, hopefully, you have, financial accounts, you have checkings, you have savings, you have a bunch of different monies built up to the point where, if you died, those people around you would be okay, right? And you don't have to have life insurance. That's really the hope with all types of insurance, right? I would love to not ultimately need car insurance, right? That'd be great, or have the highest deductibles possible on car insurance. That would be awesome because what that means is that you can pay for it, right? There's no problem if you can pay for it, right? And you can self-insure. But as long as you can't do that, you need life insurance, okay? So you wonder why, I may say that term insurance is better, right? And permanent life insurance is not the best way to go. Well, term is the least expensive form of life insurance, right? So that just gives them a step up in the first place. Then term life does one thing that life insurance is supposed to do. What it does is it replaces your income when you die, right? It pays some predetermined amount when you die. That's all it does, right? It doesn't do anything special. It just, when you die within a certain amount of time, that's why it's called term life, right? There is a term over which if you were to die, then a death benefit gets paid out to your beneficiaries, right? And I'll get to all these words that I'm using here shortly, right? And it replaces the fact that you were alive and creating an income, right? And what it does, it spares your loved ones financial stress at a really hard time, right? And as we'll see, as we get into other kinds of insurance, they tend to be way more expensive, way more complicated, or both, right? So there's a lot of confusing vocabulary that's used around insurance. And I don't want you to be, overwhelmed by that, especially if you're watching this episode trying to figure out what life insurance is in the first place, right? So there's just some basic terms that I want to help you understand so you can understand how life insurance works. So the first is policy. When I say policy, a life insurance policy, that's just a contract between you and the life insurance company. Then I say premiums, right? I said that earlier. Those are the payments that you make in order to pay for this insurance, right? So you can make those payments monthly or annually or semi-annually or whatever, but they're known as premium payments. Then there is the word policyholder, and policyholder is the owner of the contract, right? Which would normally be you, the one that is insured. But you could buy a policy for another person, but we're not going to talk a ton about that in today's episode. Then there's the word claim, right? A claim is nothing more than a request to the life insurance company to receive the death benefit. And if you have life insurance on yourself, obviously you would not be making a claim on yourself. Your beneficiaries would be making a claim for you and be getting paid in that way. And there's a death benefit. I used this word a moment ago, right? Death benefit, this is the life insurance payout, right? It's the money paid out. It's the benefit to the beneficiary when you die, which brings me to what is a beneficiary, right? Beneficiary is the person or people that you choose to receive this death benefit of your policy, right? It can be your spouse, your children, but it can really be anyone you choose for it to be. In a nutshell, right? Once you, the policyholder, start paying your premiums, the insurance company guarantees that they'll pay the death benefit to your beneficiaries when you die until either the end of the term of your life insurance or until you stop paying said premiums, okay? Now let's just dig a little bit deeper into how term insurance works and how permanent life insurance works, right? Let's start with term insurance, right? Premiums are usually monthly, right? And so long as you keep them current, the insurance company will pay a defined amount, sometimes called the death benefit, to your beneficiary should you die, right? This is what we said life insurance looks like. Similar to house or car insurance, term life is basically a kind of coverage that hedges you from the full financial impact of big life events that most people face eventually, but at a relatively affordable price. And that's one of the keys to term life, is that it gives you such a coverage at a relatively affordable price. Now, to decide on what your price is going to be, what the premiums are going to be, the insurance company takes into account a bunch of different factors, right? They take into account your age. They take into account your health. They take into account your life expectancy. They take into account other lifestyle choices, right? Like, if you're somebody who goes skydiving a lot, they would take that into account. If you're somebody who smoked or dipped, they would take that into account. Now, in light of those factors, right, getting term life insurance is going to be the cheapest the youngest you are, right? When I say they take age into account, the younger you are, the cheaper it's going to be. Why? Because the likelihood of them actually having to pay out on a young person is quite low, right? So they're going to make the cost of the insurance itself quite low, right? It's the same thing like when you get a car loan, right? If you get a car loan, what's going to happen if you have terrible credit, right? If you have terrible credit, then you're going to have to pay a higher rate. If you have great credit, then you'll have a lower rate, right? And that's like age, right? High credit being a low age, and low credit being a high age, right? So that would be kind of the intuition that goes into premiums. So let's just look at an example, right? So for example, take Justin, a healthy and non-smoking 35-year-old who makes $50,000 a year. Justin's death benefit is $500,000 because what he did was he said, I'll get 10 to 12 times his annual income. And the reason that somebody may do this is so whoever is trying to replace your income could make either anywhere between 8 and 10% on the money, right? And keep the principal amount, creating your income every single year. That's at least the theory, the intuition behind that, but mostly because it'll just make the money last, right? And then because he has young kids, he signed up for 20 years of coverage, right? He's hoping his efforts to invest in retirement will have paid off by the time he's in his 50s, and figures he'll be self-insured by the time his kids are grown. If Justin dies before his 20-year term is over, guess who gets the $500,000 from the insurance company? That's right, his wife and kids, right? Who are his beneficiaries, right? Most people make their families the beneficiary of a term life policy. But if he does not die, and this is the part where people go, well, I don't like this about a term life policy. If he does not die, then what happens? Then there is no payout to anyone, right? You just paid those premiums, and those premiums are ultimately lost. And that's what people don't like. But again, think about other types of insurance that you pay towards, right? If you're paying homeowners insurance and you never make a homeowner's claim, are you going to have to just not pay for homeowners insurance? No, that money's just gone, right? You're not going to get some reimbursement because you didn't make a claim. Same thing with car insurance. Now, car insurance will do like discounts and things, because it means that you were more responsible or, a better driver if you didn't make a claim or whatever, right? They'll do accident forgiveness, but still the total amount of your premiums is getting basically absorbed and taken in by the insurance company, and you're not getting any payout, right? So don't think that this is out of the norm to pay for an insurance and it not pay you back. Because we need to make this distinction between insurance and investments, right? Insurance should be and is, if used correctly, right, something that is going to be paid for in order to be protection for you, right? You're paying for protection. But investments should not be paying for anything, especially not protection. Investments are taking your money and growing your money to where you can have that money later on, right? That is not what insurance is, right? And it should not be what insurance is, because anytime you try to make insurance into an investment, it's going to be a more costly, lower quality investment, right? Which brings me to, how does permanent life insurance work? Okay, now the short answer to this question is that it is complicated. And that's partly because there are several different types of permanent life insurance, and partly because the various kinds are often loaded down with all the bells and whistles, right? The main difference between permanent life and term life is that with any form of permanent life insurance, you're getting coverage until death, no matter how far in the future that happens, right? So that sounds nice. You're like, oh, well, I get coverage forever. That's great. Now, we know that might sound like, a longer lasting form of service, but trust me, it only sounds better because it's a permanent solution to a problem that is temporary for most people. So again, let's think about the idea of being self-insured, the idea of not having to pay life premiums over a long period of time, right? The risk of dying before you've had time to build up enough wealth to replace your income is the risk that we are trying to cover, not just the risk of dying at any time. Many people perceive permanent life to be a better deal, but that is not correct, right? It is wrong. Now, here's the deal. Term life is going to be a more affordable option than permanent life, not just some of the time, but almost all of the time. Term life is a simple policy, guarantees a death benefit if you die with that term. Very easy to understand and afford. But most kinds of permanent life are not only going to be way more expensive, they'll also be trying to do more than one job, right? They try not only to offer you this death benefit, what's offered by a term life product, right? But often a savings account as well, or a retirement account or other investments, and sometimes all of them at once, right? That is why these products end up being so darn expensive, because if you're just trying to cover, some death benefit for someone's death over some period of time with a term life policy, that's not going to be extremely costly. Now, of course, it's going to get more costly to cover somebody if you're covering them until death, of course, right? You're covering them permanently. So that increases the cost a bit, but the biggest increase in cost comes from this savings portion of permanent life insurance policies. Now, here are the kinds of permanent life insurance, and just remember that these are the ones that are going to be the most ridden with fees, the most ridden with cost, and the most ridden with things that just aren't true insurance. Now, if you have these, you just need to get them reviewed. You need to get with a good insurance agent that knows what they're talking about, and just see if these are actually good for you, or if you could be truly investing your money in a different way. So whole life, universal life, and then variable life are all products that can be used, okay? Now, what's the truth about life insurance? The truth is that life insurance is not supposed to be a retirement plan or a savings account or whatever. It's supposed to be insurance. So by definition, it's a form of financial protection against known risk, right? We all know we're going to die, so that is very much a known risk. Investing, on the other hand, is a wealth building tool that has its own place in your own financial strategy. But here's the thing. When companies or their customers try to make life insurance do anything other than replace the policyholder's income, a big mess is usually the result. So trying to blend insurance with investing is a disaster that will cost you both in terms of higher premiums and in terms of lower return on investment, right? People think, oh, well, I can do all this investing within an insurance product. That's fantastic. Well, it's going to be extremely costly to do that investing when you could have just done it in the natural way. And typically they'll offer you some type of downside protection or something in, return for, some percentage of returns, or they'll give you some guarantee or something. But almost always is this a way worse alternative to just investing your own money in a traditional way, right? Now, so what we need to do is we need to focus on simple, proven strategies for life insurance that work, right? Cheap term coverage, right? That's only designated to replace your income when you die. That's the way I think that life insurance should be done. Do life insurance however you want to, right? But if you want the cheapest, right, you want the best way to just replace your income, be very efficient, term is the way to go. Now, maybe you wonder, do I need life insurance? And as a matter of fact, almost everybody needs life insurance. So no matter what stage of life you're at, life insurance makes up an important part of financial freedom, of financial security over a long period of time, right? So let's take a look and just see, hey, if you fit into these categories, do you need life insurance? So the young professional, right? You may have some credit card and student loan debts that need to be paid after death. But if you're completely debt-free with no dependents, then all you really need to worry about are burial costs. And if you signed up for a group life insurance plan through your employer, there may not be an urgent need to take out a life insurance policy just yet. But again, if you have a family, if you are the primary breadwinner, then of course, yes, you do need to get life insurance as a young professional. Then what about a newlywed? Well, congratulations, right? You started your new life together, and it means that you're there for one another through thick and thin, but till death do us part is not the end, right? You should both have a life insurance plan in place, right? This isn't just about paying off debts if one of you passes away. It's about protecting and providing for the future of your spouse as they grieve your loss. And you just need to get enough insurance to make sure that they are taken care of if something happens to you. Again, life insurance is about, it's about taking your income and protecting it, right? Protecting the income that you make. And you may say, oh, well, my wife is a stay-at-home wife. Why does she need life insurance? Well, maybe you have kids, right? And if you have kids and, you know, your wife keeps the kids now, well, what happens if something happens to your wife? Then what are you going to do with your kids? You're going to have to pay for someone to keep them, right, while you work. Well, if you don't take that into account and you don't have life insurance on your spouse, then there's going to be a problem there. There's going to be a gap in what you actually need. So just take those things into account. But as newlyweds, you at least need to start considering this idea of life insurance on one another. Then as parents, right, if you have children, right, you and your spouse need to be covered, even if one of you does not work outside the home, as I just laid out, right? The absence of a stay-at-home parent would greatly impact the family budget. Childcare costs are not cheap. Now consider what it would take to run the household, provide for your kids, and possibly pay off your home in the years following your death or the death of your spouse. Trust me, you want the peace of mind that is associated with having life insurance on your side. Then what about retirees? Well, at this point, you might already have hefty retirement savings in place. You could even be well on your way to becoming self-insured and not need any life insurance, right? Like I was alluding to earlier. This is a great place to be, but let's say you're still paying off your house, trying to add to your retirement savings, right? If you died today and your spouse no longer had your income to rely on, would the amount in your savings account and in your retirement accounts, your investment accounts, be enough to take care of them? Those are the things that you have to be thinking about if you're going to make a holistic decision on life insurance. Now, how much does life insurance cost? Okay. Well, the cost of your life insurance premium, again, depends on the type of insurance that you're buying, right? Term or permanent. But other things play a role too. Your age, your health, your lifestyle, all those types of things. So let's look at Sarah, let's say, okay? And she's in her 30s, a non-smoker, good health, married with one child, and earns $40,000 a year. On average, if she took out a 20-year term life policy with a $400,000 death benefit, she would pay around $18 a month. Now, if she opted for a permanent type of life insurance with a death benefit of $125,000, she would pay around $100 a month for that, right? So you see there over 5 times more in premium for, a third, a little less than a third of the death benefit between, the permanent and the term life. You see why I say term life tends to just be a better deal. Now, what insurers look at when they're working out your life insurance premium is your age, your gender, typically because men die first, right? Personal and family medical history, your weight, if you smoke, if your lifestyle includes risky hobbies like skydiving, shark wrestling, all those types of things, if you regularly travel to dangerous parts of the world, all these things that impact whether you are going to die or not. Now, after they have these details, the insurance provider will schedule a medical exam with you unless you're buying a policy that does not require a medical exam. So now that you know what they're after, you can actually see how you can reduce your premium, right? while you can't do much about your age, you can quit smoking, you can regularly exercise, you can try to lose weight if you need to in order to bring those premiums down. Now, how much life insurance do you need? You may be saying, yeah, okay, term life, all these things, but what should my death benefit be? Well, again, I'm taking these things from Dave Ramsey, and I tend to agree. Your death benefit should be about 10 to 12 times your annual salary. Again, because this is going to leave the reasonable expectation that your spouse or whomever, right, can use this, 10 to 12 times your annual salary for some time in order to continue living life in a relatively normal way once you're gone. All right. So again, let's look at Sarah from the earlier example and see how a death benefit of 10 to 12 times her income could really help her family. Right. So again, her salary was $40,000 and her policy death benefit is $400,000. Right. So 10 times her income. If she died, her family could invest the $400,000 and they could potentially make a 10% annual return. That's what the stock market has made over time. And that investment could yield $40,000 a year. And let me just say, even if you're not making 10% a year, right, you can still make some reasonable effort in order to, supplement the income that was lost, even if it's not just complete supplementation like we're talking about in this example. Now, obviously, the preferred method would be just invest some amount, just take off the interest made every year, like in this example, and the family could keep the nest egg and live off of it. But ultimately, if that doesn't work out, you have many years of income supplementation and would likely give the family enough time to get on their feet otherwise and make other decisions. And that's really the key with life insurance, right? You want to give your spouse or whomever the time, and you want to give them the freedom and opportunity to make the decisions that are best for your family over a long period of time, right? Most importantly is just the peace of mind and financial security that is provided for your loved ones in a hard time, okay? Now, what type of life insurance is right for you? Well, in case it's not clear by what I've said before, I think that the type of life insurance that you should try to get is term life insurance. But again, not everybody can get term, especially older people who may have a few more medical issues, might not be able to get a term policy. But especially if you're old enough, you're maybe in retirement, you may not need life insurance, right? So again, not only is term cheaper than the permanent kinds of policies, it also expires right around the time that you may no longer need it, right? The typical length that you can get term policies for is 30 years tops. But I say that there are longer policies, but those policies are really for people who are, in their 20s, early 30s, because otherwise they would get a little more costly for other people or just not be able to work out at all. Okay, so I do think life insurance is worth it. I do think life insurance is something that you need to take into account. Hopefully, right, I've laid out the fundamentals of life insurance for you today. I've helped you to think about it. Obviously, I've provided a lot of opinion and a lot of thought too on the need for term versus other types of permanent life insurance, but do the research yourself. Think about these things on a case-by-case basis. But for the vast majority of individuals, that is the most efficient way to protect yourself from the risk of death and to protect your family from the risk of death over time. So I think that I know that this is something that you need to be taking into account. And this is something that if you haven't thought about it, you need to think about it as soon as possible. Try to find something that's very cost effective for you, just like any other type of insurance. It's not about who underwrites it necessarily. It's just about the fact that it's cost effective and that you are covered. So hopefully this helps. Hopefully this helps to clear up an area in our financial lives that is not often talked about. And when it is, it's often talked about with a lot of misinformation. So hopefully this helps you, but go out and get life insurance if that's something that you need to do today. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. So tune in Monday as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.